There's a real sentiment of confidence around Ethereum and what's coming over the course of the next few months. And when we saw a slight recovery just a few weeks ago, we saw Ethereum accelerate much quicker than Bitcoin through that short space of time. It's settled down now. What's going on with Ethereum?
So Ethereum is transitioning to what's known as proof of work, where you get a bunch of miners, which is computers that crunch really complicated maths, use massive amount of energy to prove a cryptographic puzzle, and they get paid. What they're doing is validating the network, and that's how Bitcoin works. And it's very safe, Bitcoin, because of it. But Ethereum is moving to proof of stake, which is different. So therefore, you stake your Bitcoin, your Ethereum, to the network to secure the network. So that means if you're a validator, you have 32 ETH or more, and you get to validate the network, and you get paid a yield for it.
The most widely used blockchain, Ethereum, is set to undergo a major upgrade to its protocol from proof of work to proof of stake sometime next month. The upgrade will bring significant changes to the Ethereum network and potentially change the investment outlook for the popular blockchain. For that reason, advisors should be prepared to educate their clients on the transition. This includes first educating them on what Ethereum is, including some of the basic plumbing behind the network, and then on how the transition could affect their current crypto holdings. Why is the merge such a big deal? For one, Ethereum is the most used blockchain and powers Ether, the second largest cryptocurrency, with around $200 billion market cap. Ethereum also hosts numerous decentralized applications and decentralized finance protocols and establishes the authenticity of millions of non-fungible tokens. This means the outcome of the merger will affect not just the Ethereum blockchain, but a wide constellation of products and services that rely upon it. And given Ethereum's size and influence, the fate of the merge is likely to have a ripple effect on the broader crypto industry. The Ethereum merge will shift the Ethereum security mechanism from proof of work to proof of stake and greatly impact the tokenomics of the blockchain. Proof of stake is a consensus mechanism currently being used by many protocols such as Cardano, which is powered by users staking their coins in exchange for the ability to validate new transactions on the network. Once the requirements of the network are met by validators, a new block is created and participants are awarded native tokens for their assistance in securing the network. Raoul Pal, the CDO of Real Vision, in a new interview has revealed the great potential this event has for investors who are smart enough to jump on it. Before we listen to him, we want to thank everyone for standing by us to get to 150,000 subscribers. Thank you, everyone. We appreciate you more than we can express. Thank you again.
Ethereum's no small thing. I mean, it is a gigantic kind of World Web3 computer. So the complexity of doing this transition is one of the biggest feats of engineering, programming development engineering, the world has ever seen. It's gigantic. But September the 19th looks like it's going to happen. Now, will it be 100% ironed out? I think so, but maybe not. Maybe there's some risk. But what happens within this dynamic is, where does that yield come from? And we don't know what the yield is going to be, but it's going to be somewhere, it's going to settle down somewhere between 4 and 6%. Where does that come from? That comes from network activity. And what it does is takes fees from the network and pays it out to the people. But Ethereum also has something called EIP 1559, which takes some of those fees and buys Ethereum tokens and burns them. So
How?
What you've got, well, they get delivered to a wallet that essentially destroys them. So what you've got is kind of buyback situation where tokens are being burnt and distributed. So this becomes really interesting. Also, there's currently about 9% of everybody staking their ETH right now, even though ETH staking's not a thing, but there's test nets and stuff where you can do this. The guesstimates are that maybe up to 30% of all ETH will be staked, because that's similar to some other chains. So that when you stake your ETH, it can't be reused for anything. It's not in the market. It can't be sold. It's locked up for a year. It can't be put into DeFi. It can't be put into centralized finance. Nobody can borrow against it, lend against it. It's done. There's less supply. Yeah. Because this whole burning yield stake means that every day there's going to be less ETH than there was the previous day. It's deflationary. So you've got a demand shock. Well, you've got these massive supply shocks. Then you've got a demand shock, which is, well, hell, I want to own ETH because I want to get a yield on it as well. So people are going to come into the market. Then the institutions, let's say Abu Dhabi Investment Authority, well, they're going to be pretty interested if they're making one allocation, which is we believe in crypto. Before it was kind of, well, we're going to buy Bitcoin. But now it's like, why buy Bitcoin when I can buy ETH because I'm going to get a yield on it? So it's an asset that's making money for me by just holding it. And the asset goes up anyway. It's like owning a technology stock with a 6% dividend or something.
Let's take a pension fund. How many pension funds have got themselves to a place where they're happy to invest in this asset class, would look at something like ETH, because that 6% yield would be fantastic for a pension fund?
That's right. So, I don't know what the number is of pension funds, but let's assume 10% have done something, whether it's VC or Bitcoin ETF, whatever it is. But it's on all their radar screens because it's a new asset that's over the longer term uncorrelated to other assets, and it has a high expected future return. So for pension funds who have a long time horizon, this is a very interesting asset. So, you're fighting with the investment committee. They're saying it's a scam. You're saying, no, we need to do this. So everybody goes through this process. Then they start getting comfortable. How do we do it? Well, you can have some allocation to VC first. And then it's like, okay, well, what do you want to do? Well, we don't know how to account for Bitcoin on our balance sheet. How do we do that? They might buy the ETF or they buy some Coinbase shares, whatever it is, right? But eventually they will come down to, if I own Ethereum, I'm going to get a 6% yield. And what does that do for my future retirees? Well, that's a higher yield than junk bonds. It's a higher yield than US treasuries. It's a higher yield than equities. Okay, so now I've got a higher future expected return with a yield. I will probably do this. So what it means is, at the margin, you are bringing in large buyers who are otherwise absent from the industry. This is one of the reasons why gold never became a big part of portfolios. It is for wealthy people, family offices, maybe endowments, but for pension plans and stuff, they're like, it doesn't give me a return to pay my pensioners with. So I always have to hope it goes up. It doesn't give me any wiggle room. Well, now you've got ETH that gives you wiggle room and the ability to go up. Okay, that's very interesting.
How can investors prepare for this merge? Ethereum's transition to a proof-of-stake mechanism will increase diversification of Ethereum, change its tokenomics, and decrease its energy requirements. When comparing the tokenomics of Ether to those of Bitcoin, it is important to note that the Ethereum upgrade is still not entirely confirmed. The upgrade has been planned for years, and further delays are certainly possible. Investors need to understand that this upgrade is incredibly complex, and it is likely to be delayed, and there are possible issues that may arise. Announcements of further delays could not only negatively affect the price of Ether, but could affect Bitcoin and other cryptos as well. Bitcoin, by comparison, is incredibly transparent and is the most secure blockchain in existence. Investors preferring less volatility ahead of the upgrade may find Bitcoin a safer bet. Whether or not investors stand to benefit by positioning themselves in ETH ahead of the upgrade will depend on a variety of factors, especially the overall market climate. Ethereum 2.0 is big news for the crypto world. The fundamental factor for crypto as an investment is whether Ethereum becomes more widely adopted for real-life uses and not merely as a vehicle for traders. What do you make of Raoul Pal interview? Please let us know in the comments section. Thanks for watching. Stay savvy.